All right. So in the last session, we were talking about substantive tests, that how to write substantive test in the exam. And this was the question which we were doing. We have done these two parts actually. We talked about that. Yes, we talked about these two parts, contamination, legal claim, and the first was there, perfect company. Now, the point is, there are so many questions like this. For example, here is the question, uh, the yes, Sagittari company, past paper question. And I told you in the last class, that the first thing when you have to write in the exam, the substantive test, what is the first thing? The first thing is you need to identify those points, sorry, identify from scenario that what to be verified. Scenario plus requirement that gives you the hint. And then you will identify sources that, okay, these things need to be verified. What are the sources? And the sources can be any document, any documents. Sources can be any, that the management, any third parties, even recalculations. These are the sources. And then once you identified the source, then you must tell what action to be taken on source, and afterwards why and how it is to be taken. Why is very much important. Which action to be performed? Action to be performed. Very important. So this is what I say: action, source, and purpose. Pass. If your procedure does not identify these three things, it means you are not going to get full marks for that procedure. And it starts with this: what to be verified. Now, so the point is, Sagittari company. Sagittari company. This question is in front of you. And very good question it is, by the way. There are requirements. The first requirement is describe substantive procedures they should perform related to the income 5 procedures to verify income. The second requirement is evidence regarding restructuring provision, 5 marks. Related to the bank loans, 5 marks. And I told you in the last session that normally audit report question is tested with it. Normally 5 marks. And of course, we will be doing audit report, then we will talk about these parts as well. Now, I give you 1 or 2 minutes. Read it. Be quick. Read it, please. Now, students, I hope you have gone through it. We have to write substantive tests in relation to income. They have not test restricted us that you have to describe write test on the cutoff of income, completeness of income, accuracy. They have given us space, and such question is easier to tackle with because you can write the procedure on any aspect of that. They did not restrict us. So this is the preliminary information. 1st July. Okay, so year end is 31st March, and non-profit organization, their revenue of 0.8 million, and draft equity and liabilities are here. So Vega Vista generates income in a number of ways. The main source of income is via an annual food and music festival. Okay, held in the September every year. Tickets which cost $35 are sold in the 9 months prior to the events and can be purchased in advance on the day of event for cash as well. Both possible, online or on the day as well. Approximately 15,000 people attended the September 20x4. September 20x4. Okay, this year. Now, and more are anticipated for the coming year. At the event, there are a number of stalls selling food, and charity receive a fixed percentage of these sales. This is another income of the charity. Yes. Now, so during the festival, volunteer of charity sign up individuals to make monthly donations. Monthly donation is the second source of income. They are paid by bank transfer to the charity. During the audit planning, completeness and cutoff Now, scenario is telling us our procedures will be directed towards completeness and cutoff. Now, it was not restricted by the requirement, but ultimately, when we have gone through the scenario, so they have told us a restriction over here. So the question name is Sagittari and Company. I'm opening our document in front of you people so that we can solve it. Yes. So before I proceed to solve it in the Word document, what should come to our mind when we are reading this scenario? If we cannot visualize it, we cannot write it. We must be able to visualize the answer while reading the scenario and the question. Remember that. If we cannot visualize it, we cannot solve it. Now, so they said, if I point out the issues here, so they sell online, they sell for cash on the day of event as well. Okay, cash, two ways. So they said that around 15,000 people attended. So the third thing is 15,000. And online they can purchase advance 9 months prior in the previous year. For next year, tickets will be sold this year. This is cut-off issue. 9 months prior. Cut-off issue. When they are purchasing advance tickets, that cannot be recorded as revenue for the year. Then the next point is, so students, the next point is, because it is related to the cutoff, the next point is, which is sundry sales percentage, fixed percentage of that. I have to identify the points on which we can write the procedures. Then is donations. Yes. Now, so 5 procedures need to be written. We have identified 5 aspects, and we can write 7, 8 procedures on it. I'm telling you. We can write 7 to 8 procedures, substantive tests. Let me open the file in the Word document in front of you. Yes. Okay, so substantive tests. The first point we highlighted, that was they sell it for cash. Very easy to verify on the even day. Okay, now we can write on it for cash. What is the source to verify? Tell me. The first thing to verify is cash sale of ticket. Tell me, what is the source to verify? It is correctly recorded. Tell me, please. What is the source? What do you think? What is the source to verify that? One is cash book. Okay. They're selling on the counter. There is ticket record. So for the tickets sold for cash on the day of festival, on the day of festival, verify from the serial numbers, of tickets sold. Verify ticket numbers of the ticket, the total tickets sold. Yes, ticket numbers are there, serial number. Yes, multiply that with 35 because they sell it for 35 and verify the same amount has been recorded in the cash book and sales for the day. And cash sales for the day. Cash book and cash sales for the day. Same amount. So you see here, the source was actually cash book and the serial number of the ticket book. That is giving information, being practical. Then they said there are 15,000 tickets sold. Yes. For the annual sales of ticket, multiply 15,000 with the ticket price of 35, with the ticket price of 35 and compare the result with the sales recorded sales income recorded by company. If there is difference, investigate. Student, this test, I'm telling you, this is called proof in total as well. It is also, this test has a name. It is called proof in total. That you are applying, the average, your, the total, your calculation, taking the total sales, proof in total, comparing with the recorded amount. Now, the next point was, so you see here, we have written one procedure on these both. Now come the sundry sales. Sundry sales. Yes. So this sale, they get the fixed percentage of sales on the stall. Yes. Obtain a breakdown. Obtain a breakdown of income of stalls, and multiply it with fixed percentage as per agreement with them, and verify the same has been recorded by the company as income from sundry sales. Yes. No, the people, on the festival, people, put stalls and the management takes fixed percentage. This is what is happening. We say, okay, what is the breakdown of the stalls income? And auditor will multiply the fixed percentage. What is what agreed with them? Same has been recorded. Same has been recorded or not? What happened? Just a minute. My screen is all of a sudden paused. Okay, right. All right. I'm sorry. The cable got a bit disturbed. So students, the same should be recorded as income from service sales in company financial statements. Same has been recorded. So sundry sales also done. Now come the donations. So donations, they say they sign up volunteers, monthly donation, and they're paid by the bank transfer. Very good. What is the source to verify? Two sources: bank transfer, okay, and then the sign up documentation. Now, so for a sample of donations from sign up forms, verify from the bank statement and bank ledger of company. And bank ledger of company that donations being received are correctly and completely recorded. It is not missed. Okay. So whatever they told, I am verifying the same from the given information. Now, the next point is online sales. Online sales. We have not verified that yet. Online sales. So online sale, one issue is sale is happening 9 months before event, which is falling in the previous year. Which is falling in the previous year. Now, what to do with it? How to verify? First of all, we should, what is the source? The issue is that they should not be recorded in this year advance, which is being sold advance, that should not be recorded in this year. So management will tell how they are making it sure. Discuss with management of company the methods used by them or ways used by them. That used by them to exclude September 20X5 festival, mean next year festival, from income method used to exclude tickets related to, ticket sales related to, yes, ticket sale related to 20X5 from income for the year. And assess that how they are recording and for a sample of such sales, verify from accounts they have recorded it, means management has recorded it as deferred income and liability. You'll ask the management how they're making it sure. For a some of the sale, you will check it. Brew can make two procedures from it. Make it the second. For a sample of online ticket sales related to September 20X5 festival. Now, done. Here, how they are making it sure. And whether They are recording it as deferred income. Now these two procedures are okay. Two procedures, because that is a new way, new source. First, inquire from the management that they're doing it or not. Now, so students, the next point is five have to be written. Still, we have room. I have not written those procedure yet, which can be written easy procedure. We know that completeness is verified by how it is verified by analytical procedures. We studied that tracing. Okay, it is verified by. So we can write here procedure, compare this year income of the company divided into three categories. Ticket sales, sundry sales, and donations with the last year. And if there is any difference, investigate. Investigate. If there is any difference, investigate. Now, so let us proceed further. If student in exams, you will not write more than five. I'm telling you. Come back to the second part. Canopus Company restructuring provision. Canopus Company recently announced plans to fundamentally restructure its production processes due to a change in the focus of the company operations. It has included a 2.1 million restructuring provision in its draft agreements. The restructuring involves refurbishment of the factory, the purchase of new plant, and retraining of existing staff. This is incorrect. These plans are finally agreed at a board meeting in March 20x5 and announced to shareholders just before year end. I have identified the points on which we need to write procedures. One, we need to verify this its issue, this its plant and equipment, refurbishment details. We need to verify. We need to verify announcement to share before year end, agreement at the board meeting. So 1, 2, 3, 4, and 5 procedures done. 5 procedures done. And 6th procedure is related to the retraining cost, which is incorrectly recorded. Students, if you can identify issues from the scenario. Now, a quick overview, a quick revision. Students, substantive tests. What are the practical ways? We can classify into two types. They are called analytical procedures, inquiry, inspection of documents. Just review the documents. You review the documents, you inquire. Okay. Then recalculation, confirmation letter, you write. Sometimes you go physical verification of assets as well. Observation. So these are the procedures, substantive tests to verify financial statement items. And these collectively call as test of details. So substantive tests, these are collectively called substantive tests. But we can say substantive tests are of two types. One is called analytical procedure, the other are called test of details. For the testing the details. Okay, so how substantive is written? These are all ways. Okay, so we must identify source. But before source, what to verify? This is more important. What to verify? Then comes the source and action. Then comes that. So we have identified what to verify here. For example, they have told us, they said that write procedure on anything on related to the restructuring provision. Now, so what we will be writing? Substantive test on it was substantive test on income. Now here, substantive test on restructuring provision. Now, the first thing is, before I write, 2.1 million, they said, is the provision recorded by them. Sahi hai? Right? Urdu sometimes get mixed, 2.1 million. So what we do? So obtain the breakdown of 2.1 million from the management recorded as restructuring provision and review it for arithmetical accuracy. Very easy. Review it for arithmetical accuracy. Obtain that source breakdown of that from management. Review it for arithmetical accuracy. Now, the next point is, they said that Acquisition of plant is included in it. Refurbishment cost is included in it. Okay, so verify from the breakdown that only costs related to restructuring is included in it, and no what is the risk here? Some regular cost, maintenance cost may have included. Okay, no maintenance cost, no regular maintenance costs are part of it. Yes, verify from the breakdown. Acquisition of plant and machinery. Yes, so they have recorded it something, plant and machinery price. Okay, verify the cost of plant and machinery included in the provision for what is the source? Tell me, what is the source? Tell me, from where we can verify it? Anyone? What do you think? What is the way? Please. Restructuring. I appreciate one student has responded, at least. Other people? This is going to be implemented. It is going to be implemented after year end. It has not incurred yet. That's why we will not verify it from the any purchase invoice or any fixed asset register. Yes, purchase agreement or quotations obtained by a company. Yes, they are the right place. No, restructuring has to be implemented. So, they say that restructure involves retraining of staff. This cost should not be included in it. Review the cost breakdown to confirm retraining cost of staff is not included in the provision for it. Yes, retraining cost cannot be recorded. This is IES 37 says. They say restructuring involve retraining as well, but its cost should not be included. Next, fifth point. Students, they said that I am identifying those same points. not written a single point from my side. They said that, yes, this is the criteria of IS 37, that provision for restructuring can be recorded only when it is approved, decided before year end. They say in the March it was decided before year end. You see. So what we will do? We will verify. Source is there. Review board minutes of the meeting to verify the approval of restructuring by the board in March 20x5. Yes. Now, then they said it was announced. This is the second criteria of IS 37. Even they were silent on it. For example, we assume examiner did not provide this last two lines. Yes, I assume they did not provide these last two lines in the scenario. We still have to verify these two, because restructuring provision cannot be recorded if any of these is missing. Yes, approval by the board, and you know that it should be done before year end. Announcement to shareholders and employees before the year end. Now, how to verify that it was announced? Obtain the announcement details or notification related to restructuring after year end. Restructuring to be implemented after year end, and verify it was announced before this year end. Verify from its date. Better. What is the date of notification? Date of announcement. Now it is done. 5 have to be written. You can write one more, because they said straight away write procedures on restructuring. One generic procedure can be written. Review financial statement disclosures, whether all the disclosures related to restructuring provision has been given as per IAS 37. Simple is that. But you will never write more than 5. Now, So let us proceed further. The third part is bank loan. Bank loan. In readiness for the operational changes, the directors of Canopus company decided to restrict the bank loans. As a result, several loans were repaid early. Very important. And a new 10-year bank loan of 4.8 million was taken out. Repayment of 150,000 are due in quarterly. Okay. Now, several loans were repaid early. Okay. To students, when you repay any loan early, sometimes you have to pay some penalty. Okay. Sometime. So that's why this is quite practical. If there is penalty, that should be recorded in financial statements. Now, what is the source to verify any penalty to be paid by a company? Because they are repaying loan early. Tell me, what can be the source to verify that when you pay off, even you get the car on lease, you on 3 year, second year you go to the bank, you say, can you please tell me how much total amount is I'm paid now and the lease? Get the car on my name. Loan agreement, very good. Very good. Loan correspondence of the company with the bank as well. Substantive test on bank loan. Now, the first procedure is review loan agreements. Review loan agreements and correspondence of company with their banks. To identify any penalty to be paid on early settlement of loans. But still it is not complete. And if it is so, verify it has been recorded. This is the ultimate purpose in the profit and loss statement correctly. Verify. Yes. Oh, I'm sorry. Yes, it is going to be updated. Just a minute. Here it is in front of you. Now, so the second point is They have obtained new loan of how much? 4.8 million. Okay. So, first of all, review the agreement for new loan taken to confirm the amount borrowed, repayment terms, and interest rate attached. Yes, to confirm. These things auditor need to verify. And any other, no, it is visible. No, my answer is visible now to everyone. Tell me. Good. Thank you. And any covenants attached. Thank you. And any covenants attached. Covenants are conditions related to default on the loan. This is very much important. What can be the other? They say they received 4.8 million. Okay. One source was the agreement. What is the other source to verify? Bank statement. Review bank statement of the company to confirm receipt of 4.8 million as bank loan during the year. Yes. Next, then they say there is installment of 150,000 including interest. So you see here, they obtained this loan on the 1st March, 31st March is the quarter installment. 31st March and 30th June. Two installments they should have paid. So review bank statement of company to verify the quarterly installments on 31st March and 30th June have been repaid. To verify the quarter installments quarterly. 30th June have been paid related to the new loan paid to the bank. Yes. Now, recalculate. Now, this installment is to be recorded principal repayment and interest charge. Now, so recalculate the split of installments payments by company into principal repayment and interest payment to verify interest payment to verify it has been correctly to verify interest has been charged by company. Where it should have been charged? In profit and loss and loan balance has reduced by repayment of principal. Now, so this is 5 procedures done. I have written again these 5 procedures from this scenario. I can write 2 more procedures which can be written here. For example, because they said us related to bank loans only. So write confirmation letter to the banks and loan providers of company to confirm year-end balances of loan of the company. Has been recorded at correct amount. Confirmation letter. Yes. Next point. The next point. Students, review all loan agreements and recalculate the loan covenants mentioned in those agreements to identify or to verify company is in compliance with those covenants on those covenants. Yes. Now, the last procedure, eighth one more coming to my mind. Review financial statement disclosures of company, whether to verify all disclosures related to non-current liabilities have been provided correctly as per IFRS, and where you are not confirm about IAS, which IAS it is, IFRS and laws and regulations. That's it. Enough. Best way. It is done. I have done this question with you. Students, remember, you cannot run away from it. You cannot think that I will spend, I'm sorry, I'm sorry. I'm sorry. I'm sorry. I could not see your messages again. Yes. Okay. Now, the last two procedures are here, generic, which I have written. Okay. It will be uploaded here. Yes. So you cannot ignore it. You cannot ignore it. Without command on substantive test, you never think. Three topics are there. Controls we have done. Second is substantive tests, controls and test of control. Substantive tests we are doing. And then is audit risk. Your exam is 60% to 70% is from this area, these three areas. Simple is that. 60 to 70%. Okay, you cannot ignore it. So you have to work it. There is only one way. Go and get the book, get the notes, start reading it. You cannot run away from it. I'm telling you, I feel like when I start practice, students run away. You have to do the questions. How you will solve an exam. Anyways, so that's it for today. We have done one question today. This was my target for today. So we will be meeting in the next class. Thank you. Take care. Goodbye.